So there is a big question here. Should we invest in bonds or should we invest in real estate? So let me just explain a little bit about investing in bonds. Bonds are paid in interest, or if you go for zero coupon bonds, it's like T-bills. You buy discounted bonds. In real estate, there are different kinds of investments you can make. You can either invest in land, property like a house, an apartment, a commercial building, a farm, a warehouse. The list goes on. Or you could invest in REITs. So some of these investments have passive income or regular income, some don't. Some don't have an income at all unless you add value to it and rent it out or something. In bonds, income is paid semi-annually. In real estate, you could earn income on a daily basis. Let's say if you're doing an Airbnb, you could get your income on a monthly basis, weekly basis. It depends what you invest in. So the big question is, which one is better? If you're looking for cash flow, then your guess is as good as mine. If you buy a property and rent it out, then you have regular cash flow. But if you want to just park your money, you don't want to touch it. Maybe you're thinking, hey, if I get all of this money, I'll spend it. Probably you want to take that money and you want to do it bonds and invest or collect the money on a quarterly basis from your tenant, or just park it somewhere so that you don't spend it. So the big question again is, which one is better? So let me share some of the questions that have come up. Bonds are secure more than real estate. Is that really true? If an economy was to go down, will the value of the bonds, let's say you invested 10 million shillings or even 1 million shillings, will the value remain the same? Whereas in real estate, if there is inflation, if the economy goes down, will the value of the property remain the same? Will the rent remain the same? So for bonds, the value will remain the same. The interest rate that you collect will be the same. So if, let's say, the bonds lose value 10 times, so your bonds now will be, instead of 10 million, they'll be 1 million. Instead of collecting, say, 100,000 per year, you'll be collecting 10,000 shillings. That's how it looks like. But in real estate, the inflation rate is what you apply to the property. If the economy goes down, the value of the property goes up. You will not sell it at the same price that it was before the market went down. And so that happens to rent. Think about the countries where the economy went down. The people who were secure are the people in real estate. It may not have been an easy time to sell, or it might have been a very difficult time to sell. But one thing for sure is you're not going to charge your tenant the same rent when you're already paying 10 times for your goods and services. It will not be the same. So is it really secure? Are bonds more secure than real estate? I would like to suggest real estate is more secure. Another question that arises is, people have been saying bonds earn more money. So maybe they are looking out for infrastructure bonds, trying to look for bonds that are less than 10 years. But do bonds really earn more money? I beg to differ. Let's again use our example of 10 million shillings, and your bonds are earning you 10% every year, and you're being paid 500,000, 250,000 every 6 months. In real estate, 15 years down the line, for example, one thing for sure, in real estate you'll get more. Why? Let's assume you're even earning a rental yield of 7%. And this is where the people make the most mistake when calculating how much they earn from real estate. They do a quick calculation on rental yield and they assume that what they're gonna make for the next 15 years is, let's say 6%, is 60,000. Okay, 6% of 10 million is 600,000 per annum. That's 50,000 per month. That's what they assume, but that's not true. You need to look into the future. If you invest in property, First, every 2 years or every year, your property is going to, you're going to do a rent escalation, meaning you're going to increase your rental yield. So let's say, assume every 2 years, your rent goes up by 5%. 15 years down the line, your rent will have gone up by 5% 7 times. 7 times. The other thing that most people forget to calculate is the capital gains. Yes, the market has ups and downs, but history can tell us how the market has performed over time. And what has happened is what you bought 10, 15, 20 years, 20 years ago is not the same today. There are people who bought apartments for 4 million about 15 years ago, and today you've sold them for 20 million. Can you get that with bonds? Can your property increase in value by as much as 7 times, 5 times? It will not. So I like to suggest, before you invest, sit down with your real estate expert, a consultant, and try and project how your investment will perform. Yes, there are expenses in real estate, but the overall benefit in the long run is much, much higher. So if you have any question, if you'd like to reach out to discuss more, if you'd like to consult on what investments to make, the best investments you need to make, please give me a call or drop me a message. Thank you.